In an overheated housing market, Nathan Birch has amassed a huge property portfolio. He's living life like a modern-day monopoly kingpin, and he hasn't even turned 30. Meet Nathan Birch, property king at just 29. Skipping schoolies and saving money, he bought his first place at 18. The cost, $248,000. It didn't take him long to buy a second or third, and now he owns 126 properties. That's 80 units, 40 houses, 24 apartment blocks, and 8 commercial properties and hotels.
That's what I want.
Extraordinary numbers, and Nathan joins us now. Good morning to you, Nathan. You have 160 reasons to be very nervous about falling property prices, are you?
Not concerned at all. Probably the biggest thing for me when I started building my property portfolio is that I took the risk in consideration, and over the course of the last decade it's been quite a journey, looking at the market that I was coming into, going back in 2004, and looking at it today.
Well, just remind us what the market was like then.
That was an overheated market, yeah. In 2004, there was a lot of buyers out there buying properties and paying overheated prices. In the current market, I still think, there's multiple different markets that are happening. So we've got the Sydney market, we've got Queensland, got Melbourne, got Perth. There's lots of different markets there. But fundamentally, I think for all investors out there watching the show today, there should always be caution taken within purchasing anything.
So, would you say largely it's overheated at the moment?
No. There's areas that I think that haven't even started to take off.
Right.
They're probably more towards the Queensland markets. That's been probably held back since the GFC. That hasn't, they've gone down in value with good upside to take off in the next 12 months, 18 months.
For those areas that are overheated and property prices do fall, is that a good time for people to get into the market for the first time? Most certainly.
If there's opportunities out there to be had, I'd rather be buying cool clothes in when the market's, if you're in winter at the moment and you're buying summer clothes,
you get the sale price.
Get the sale price. So.
Tell us, how did you do it at the age of 18? Yeah. We saw that you bought that first property, $240,000 or so.
Yeah.
How did you get the confidence to do it, and how did you keep moving forward from there without getting nervous?
Throughout the whole process, there was no I didn't have anyone that was going to back me or anything like that. So coming from a working class family, I just saved up every cent that I could. I worked 2 full-time jobs and committed myself. I thought if I could sacrifice 10 years of my life up until the age of 30 to build a property portfolio that's going to support me for the rest of the life, then it's a good sacrifice to make. And
so 160 properties you're going to keep buying?
100%, yeah.
Particularly with prices falling by the sounds of things.
In any market, over the course of the last 10 years, I've been buying in good markets, bad markets, and it's a matter of knowing what you're looking for. And I've got 3 tips for investors that are looking.
Please.
The first one's to make sure that you buy any property below market value. So what that does is it gives you an exit strategy. So if you're buying something that's worth $250,000 for $200,000, it's giving you $50,000 in the buffer from day one.
But how do you know you've done that? How do you find those properties that are below market value?
A lot of research. That's probably my biggest skill set that I've adopted over the last 10 years of investing, is being able to locate areas which have got, looking at how valuers look at properties. That's how I look at properties. So looking at if there's properties that are selling for $250,000 in the same unit complex, and I'm got the ability to pick it up for whatever reason, whether it be a distressed seller, whether it be someone that's listed the property wrong, or just someone that wants to get out of it at a lower price. The ability of that gives you, confidence when buying to have an exit strategy and also make money from day one.
Okay, the 2 other points?
Yeah, the other points are I want to make sure that I'm buying in good quality locations that are going to have upside for growth.
Hold their value?
Yeah, hold their value. Because when I first started investing, my goal was to get 10 properties, and I thought it was unachievable to do that because I've never seen anyone do it beforehand. 10 properties that were in sort of Sydney metro area, be it out Western Sydney, southwestern Sydney, whatnot, which if I can buy them for $200,000 and they're worth $250,000, gives a good opportunity for them to go from $200,000 to $400,000 in 10 years, and that turns $2 million into $4 million. So it was just monopoly.
And your final point?
Final point is making sure that you've got strong cash flow there to ensure that if anything goes wrong, the properties are supporting themselves. and they're not, you know, eating into your lifestyle and cash flow and all that. Because if something goes bad, you know, you want it to improve your lifestyle, not to take away from, you know, fun things that you do. So.
Good advice.
Thanks,
Nathan, thanks very much for that.